Couple disclaimers before we get into the video. Obviously, we are not your financial advisor, and any information in this video is for educational purposes only and does not constitute advice. Hey, it's Ryan from the Dividend Investors Club, and this is a 2-minute trade idea where I give you my 2 cents in a stock in 2 minutes. Today, we're continuing our 10 dividend stocks to buy now series. I'm trying to hit every sector in this series, and one sector we haven't hit, and it's been one of the hardest hit sectors, is the utility sector. And so today, we're going to talk about Consolidated Ed. You can see the chart here. This looks very similar to the chart of most utility stocks right now, and folks, this is what it looks like when interest rate fears go up to utility stocks, and this is what happens, right? As the risk-free rate increases, it makes these stocks less attractive because people were investing in these stocks for that interest rate, but it is a slow growth industry, so you're not getting that growth along with that dividend yield, and that's the reason why most folks hold on to these types of stocks. But this is kind of the time in the cycle when you want to get in on these stocks. The yields are typically higher than they have been in the past, and you've actually got a little bit of upside potential here, and that's what I think. A lot of these utility stocks, we may not have bottomed out yet, but clearly we've had a very big drop, and I think a lot of those interest rate fears are priced in to this sector, and this is definitely the time when you want to start dabbling. Stick to the leaders, and I think Consolidated Ed is one of those leaders for sure. And so let's take a look at the stock profile here. You can see it is a Dividend Aristocrat. That's why it has a 9 ranking on the dividend side. A safety is kind of in that mid-range, 5-6 range is typical of a utility stock. They tend to not have the strongest balance sheets and the strongest operating trends. Like I said, they're kind of a lower growth type of industry. So that's kind of typical for that kind of sector. And quite frankly, values have come down. So they're not huge value plays either. But kind of right in that mid-range, valuations have kind of stayed stable, if you will, because their kind of earnings trends have kind of come down and things like that. So there's some industry headwinds that are kind of causing that valuation ranking to stay kind of intact there. But it is a 3.8% dividend payer. It's paid for 43 years in a row, so obviously that gives it aristocrat status, and it is in the buy zone. And actually today it's down a little bit even more. It's down to $75, so it's right smack in the middle of that buy zone. And so again, this is one of those times in the cycle where you want to add to your utility exposure, and I think Consolidated Ed is one of those ones you want to do that with. Just scrolling down, looking at a few other things, and this is what gives me confidence in the level that we want to invest in. So it's off about 15% from its high, and that's a normal pullback. So if you look at these 1 and 5 year volatilities, which I often like to look at because I like to buy stocks that have kind of normal pullbacks, and so this is obviously a very normal pullback for a stock like this. If this was at 30%, I wouldn't be buying the 15% pullback. I'd want to wait for that 30% pullback. And so this type of pullback for a stock like this is about what it does in kind of a normal cycle. And so that's what gives me kind of confidence that this level could be a good entry point. And I think there's probably 10-15% upside to some of these utility stocks. So you're going to get that nice dividend, that nice 3.8% dividend, obviously it's been a very consistent pair, and I think we got some upside here. So I think it's a good time to get into these utility stocks. One other thing I just like about Con Ed compared to some of its peers too is its lower payout ratio. So Con Ed has a payout ratio around 50. You tend to see a little bit higher payout ratios with some of these utility stocks, and so that's what I like about this stock. So this is one of my favorites in the utility space, and you definitely can't ignore it. And that's my 2 cents on Consolidated Ed. I think we all know that the stock market can be a scary place, especially if you're trying to go at it alone. But you don't have to do it. You don't have to be there alone. At the Dividend Investors Club, it's a community of investors. We're working together to grow and preserve our wealth. So if you like this video, please check us out at dividendinvestorsclub.com. Consider joining the club and joining us, and definitely subscribe to our YouTube channel by clicking the subscribe button below this video. Take care.